Okay, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for, what are we? We are the 24th of October, a week before Halloween. Couple interesting things just to take note of. Technically, best way to say it, right? Technically, Halloween is not a holiday, but when do you think the end of the month sell-off or rebalancing will happen? When would you expect that end of the week rebalancing to happen? So a couple of them say Halloween. But do you know brokers that like to work on a day where they're expected to be with their families and take their kids out for I don't know, take your kids out for trick or treating? We all work, right? We all spend all day working, but probably rebalancing will happen on Friday or any other big down day this week. And where I'm going at with that really comes down to rebound thing. Come on. Thank you. Because if you take a look, we have huge, like we've got 19% of all the S&P 500 companies are reporting Tuesday, Wednesday, Thursday. 3M, GE, General Motors will be before the market opens. Halliburton, Kimberly-Clark, UPS, Valero, Microsoft after the market closes tomorrow. Coke before the market opens. Google after the market closes. Visa after the market closes. Texas Instruments after the market closes. I mean, there are a lot of big names tomorrow. Wednesday, Boston Scientific, CME Group, Garmin, Hog, which is Harley. We have Hess Company, Hilton, Heinz Kraft. We have Boeing, Ford, Meta after the market closes. Thursday, Caterpillar, Honeywell, International Papers, MasterCard, McDonald's, Merck, Southwest, Twitter, Amazon, First Solar, Intel, SkyWest. I'm moving this out of the way. T-Mobile, Gold, Steel, Apple. I mean, we've got a ton of economic reports coming up in the next couple days. If you were to see something like Boeing, Ford, Meta tank, you'd have a rebalancing on Wednesday. A lot of people have asked me, Kevin, why do you not like Intel? And just as a heads up going into earnings, Intel is not properly run. I should say management. It's just not properly run by management. It's they've made amateur mistakes for a year now. I'm not impressed with their management. They are not. I am not looking to get into Intel because Intel is not who Intel. They're just not who they used to be. Not someone I'd be investing my money in. Another quick comment, just to help you understand. Earnings affect after market futures, but they rarely matter unless directly related to earnings. Meaning that when people look at after-market hour earnings like today, and I'm going to pull it up on my phone, as I take a look, our earnings after market hours here say, Dow futures are up 0.03, S&P futures 0.03, NASDAQ futures 0.00. We're flat. It typically doesn't matter what the futures are after market hours. It's how we open up in the morning. A lot happens. We have the Chinese or the Asian markets open. They go on their lunch break. They come back and close. European markets are open. In fact, usually see a lot of European markets close between 10 and 11 o'clock Mountain Standard Time, which then money looks for new homes out here. It's almost always you get that East Coast lunch hour between 10:30 and 11:30, and that 11:30 to close, you get a push. Sometimes you get that push at around 11:15 Mountain Standard Time, which would be 1:15 Eastern. It's that little push into European markets that have closed, so new money is looking for a place to go. With that said, a couple of you have brought some things to my attention. And it really comes down to this webinar are for those of you who are doing your own investing, who you have other accounts outside of Hurley Investments, so we would be down 42, 63, and 66% respectively. This is also going to be a little bit in regards to what I think we all go through is we sometimes look at our accounts, we're just like, oh my gosh, what are we doing, right? This is the webinar for you. And I'm going to start off with a couple quick questions. For those of you that are investing, how many of you expect to win every time? Okay, so it's, of course, I'm saying this with a little change here because I want you to think about this. So if you don't expect to win every time, why do you get so ticked off on the trades that you lose? Really, I want you to think about that. I'm going to even be quiet for like 10 seconds. Why do you get so ticked off on the trades you lose? I need you guys to be quiet now. Okay, because I've asked myself that same, I've asked myself that same question, right? Here's the big but, right? We didn't put it the way it's supposed to be. For me, I absolutely hate losing. I am a little, I just hate losing. It bugs me. It bugs me at church softball or church basketball. I hate losing. I see two more that came in, and this is really good. Lack of confidence in trading system, right? I'm going to go ahead and put methodology in there as well. Because sometimes we doubt the methodology. And that particularly, again, comes with education. And again, if they were doing it all the time, then they'd be doing what I'm doing. They wouldn't be educating people. And the last one, I'm going to agree 100% with. And this is where I think where I'm trying to push today. Self-doubt clouds the next, and I'm going to change it just a little bit, to the next opportunity. Is that okay to put it that way? You said the next trade, but it's more than the next trade. It's the next opportunity or the next run up, which is really where I'm going to go today. Someone tell me, what is the first thing you hear every time the market goes down? Every time the market goes down, we hear what? Wow, you know what? That's not what I was thinking, but you are 100% correct. Two of you. It will come back. And the other thing, which is exactly correct, this time is different. Right? The market will come back, and this time is different. We already have some preconceived ideas. Okay, it's going to come back because it always has before. Now, there's never been an exact time frame, right? It's always come back before, so it's going to come back is technically true. And, well, this time is different is also technically true. I think going through 2008 to 2013, that 5 years we had like 48 or maybe it was 46 first time occurrences that have never happened before, and the market came back. So understand that we're going to have those thoughts or the processes are, hey, something's different this time around, but it's going to come back. So our key, right? Our key is what will we do until it comes back? And really you've got a whole bunch of choices. But one is you can just wait and hold, which is literally 99.9% what all other money is doing. You are paying someone else to wait and hold. A lot of people are churning out of losing funds, which equals more commissions for the broker, which is just, again, not necessarily smart. We have trading around the events, which is technically what we're doing, right? Trying to make up something on the way down. We have day trading, never smart, right? And then what happens to a lot of people, they quit. And let's face it, I'm just going to go through my year, right? My year. Horrible transition from E-Trade to Schwab. It literally could not be any worse on our transition from E-Trade over to Schwab. I mean, it was just, we had accounts frozen for 4, 6, 8 weeks. We had paperwork that was lost by Schwab. We didn't have correct options accounts on them. I mean, everything that could have went wrong went wrong. Absolutely horrific, right? June, son went through traumatic brain injury, which for him, it's at least 2 to 3 years, if ever. Come on. For him to be able to come back to the person he is, most likely he's going to have that 4th to maybe a 6th grade, maybe an 8th grade mentality the rest of his life. And then we went through September, right? Where on our side at Hurley Investments, finally we got our crap together and we were where we needed to be. So I'll be honest with you, this year, if you wanted to look at a year that someone would offer me $1 million, which it's actually about $1.2 million to buy Hurley Investments, don't think I haven't sat there and went, whoa, what am I doing? Well, I know what I'm doing. I've already been to that other side. Is it tempting to be paid $1.2 million? It is. But I wouldn't put my money in it, and I'm not going to put your money in it. Which is funny because as I've hung out with some of my friends or those guys who really have it tough, knowing that sometimes in the stock market it feels like life or death, I went through a couple sayings, right? I've gone through a couple sayings as I'm looking at ways that motivate me to stay in the game. This is the game of life. This is the game of the stock market. It's the game of retirement, of work, of providing for a family, the game of being a good person. And a couple of things that I thought, which really come from people who their decisions are life or death. The only easy day was yesterday. And how true is that? When we're looking at charting, we're going back to past history, right? It's so easy to look back in time and understand what you were supposed to do, right? That's the problem with education. They already know it all. They're not in the throes of dealing with fear, of dealing with frustration, dealing with greed. 2, get comfortable with being uncomfortable. If you're not uncomfortable with the stock market, what do we call that? I'm going to ask you guys. What do we call it when someone's content with the stock market? A fool. I like that one. Uneducated. An idiot. Denial of risk. Complacent. So that was the word I was looking for. Alan, I agree. Complacent. Stuart, you said denial of risk. I agree with that. Not understanding the risks. I like number 3. Don't run to your death, right? It's really interesting. When I think of don't run to your death, let me again, I'm going to ask you guys, what do most people put on their stock positions? Like everyone with Baidu today, what was put on those stock positions for Baidu that they thought was protection? Anyone know? Wow. Stop losses, exactly right. A stop loss. Can you imagine all those people that had stop losses this morning on Baidu? Unbelievable. Baidu today closed at 79.84. The lows today, oh, come on. Don't have it. Let's see if I can pick it up on, see if it'll pick it up right here. No. There it is, 75, 74. As I looked at it, let me see if I can't find the lows today. Thought it was $74 even. Yep. $74 even. That was the low today on Baidu. All those stop loss people booked like a $17 loss. Everyone that got out at 74 finished $5.75 lower than where it traded. Nobody got out at the $95 mark that it was at the close yesterday. It's shocking. Absolutely shocking. When it looked, and when we were looking at things today, don't run your death. We typically are not letting anything run pre-earnings. We're not going to use stop losses where you get in, get out at 70, buying at 95, get out at 74, buy back in today at 77, get stopped out a second time at 75.06. It's insane. It is absolutely ridiculous at some of the things people do. And I am a little shocked myself because it's tempting to make some of those mistakes. We did take off the leaps a while back. We do have some shares. Anyone knows what we're going to do if the bottom just falls out on Baidu? What are we going to do? There you go. Perfect. We're going to add a second set of puts. From 160 down to 120, we made like $46.40 on the $40 drop. We'll do exactly the same thing again if we have to. What I really like in the military, they have a shared sense of purpose. You will always come to a point when you're going to go, I give. I absolutely give. And that's when someone else picks you up. The Navy SEALs use a quick phrase of move, shoot, communicate. Really what they're trying to say here, and I've heard it, I've never heard it move, shoot, or communicate because I've never been in those situations that these guys are, but they work the problem. Work the problem. Find a solution to what's happening. Find an answer to what's going on. I like this one. No plan survives first contact with the enemy. That is so true. That is so true that how often, I mean, the reality is it's less than 50%. When I think something's going to happen a certain way, 50% of the time it does. Well, probably 48 or 49% of the time it does, and 51% of the time it doesn't. Really, it's huge. Don't think you're going to figure it out or you have figured it out all the time. And the big one is all in all the time. For those of you that have done the education or think that you're going to be doing this with, you want to be investing part-time, it just doesn't work. And I like the phrase that they're saying in here because there are a couple points that I really, really enjoyed. Just being a good performer won't cut it to make the SEAL team. You have to give everything you have just to make it for the next day. Whether you're building a startup, leading a team in an organization, being an active parent, battling cancer, training for a triathlon, it's got to be all or nothing. Mediocrity and moderation won't get the job done. Give everything you do, everything you've got. And that's huge. I can't tell you how correct these quick 7 sayings are that for me this year I've had to use forever. Absolutely forever. But for this year, our transition from E-Trade, that first quarter of this year, horrific. I've never had such a problem having people moved over. And this is my 4th or 5th brokerage I've been to in the last 20 years, 21 years, 22, 23, 23 years. Unbelievable. June, I've been through a traumatic brain injury. Seeing my son go through it, the stress is unbelievable. Going through September, the stress was unbelievable. Thank goodness we did so well in September. Finally, we got things back on track. We got things where they had to be. But I'm going to tell you, there are those times you've got to pick each other up. The only easy day was yesterday because we already know what happened and we survived it. You've got to be comfortable with being uncomfortable. That's what being in the stock market is. Guess what? I'm never comfortable with being uncomfortable. That's why we use the long puts to protect ourselves. Don't run to your death. It's amazing, you know. Look how much trading in the market has changed, as well as military strategy. Line everyone up, shoot everyone down. The person that has more bullets and more soldiers wins. You know what? Buy a crap ton of stocks, watch them all go down. Don't worry, it's going to come back, right? Having a shared sense of purpose, having others that'll pick you up, because everyone's going to come to that point where they're done, they quit, they're exhausted, you don't have any more to give. That's when you help the next man up. The next guy helps you up. They bring you up. Move, shoot, or communicate. I prefer to just call that one work the problem. Working the problem means you're actively doing something instead of staying stagnant. I've most often found people that stay stagnant, that are too afraid to do anything, that don't know what to do anything. Those are the ones that freeze, that panicked. Those are the ones that die. They get run over. The market eats them up. You've got to always be working the problem. No plan survives first contact with the enemy. All in all the time. They're just 7 little phrases that for me have made the world of difference in the past and a world of difference for work the problem, for getting me through those tough times in life as well as the tough times in the market. Okay, here we go. Earnings are coming up. This week is huge. 18% ish of the earnings are coming today, tomorrow, Wednesday, and Thursday. Some big names are coming up. Those big names are what we call bellwethers, and there are a bunch of them. Kind of squeezing on down here. Again, General Motors, and what's the other big one? It was General Motors and Coke report before the market opens tomorrow. UPS before the market opens tomorrow. Valero before the market opens tomorrow. General Electric before the market opens. Our futures are going to be all over the place. After the market closes, Google, Visa, Microsoft, some big ones there. Wednesday, same thing. I kind of went all over these already. Be prepared for some wild movements in our market the next 2 or 3 days. Kevin, is that why you guys have some SPY puts that are losing money in our accounts right now? Yes. We have some SPY puts that really came down to nothing more than this. We broke 3,700, hitting a pivot point. So we added the SPY puts primarily for this week. It'll be a big test to see if we can gain 80 more points, or roughly 2%, to get ourselves above the 50-day on the simple moving average. Now, understand, most earnings have been coming in really bad. Estimates are low, earnings are coming in at low, but the expectation was that inflation would be wiping out, really just wiping out companies. That this inflation was going to be so bad that we were going to see like a negative, God, was it $13? I think they expected a negative $13 of real earnings for this quarter. But guidance was going to push us higher. It just hasn't happened. Pretty interesting. Right now on the S&P as of today, we are technically bullish. Kevin, you've got to be kidding me. Nope. Didn't happen all together, but we have a crossover right here. You'll get a crossover right around here on 5 and 15, 9 and 20, 15 and 30, whatever you use. And just a little delay, we got our true crossover today on the RSI. We are technically bullish on the S&P. If you take a look at the Dow, it's going to look very similar. But on the Dow and those 30 stocks, they broke the 50-day. Crossed over last Friday. And then a week earlier, we had the crossover on the MACD. Very interesting to see where we're going to keep going on the Dow and those 31 stocks. Be interesting to see. Then on the NASDAQ, we're still technically bearish. Haven't crossed over our RSI, even though technically we're 0.16. We actually have the lines flattening right here, as well as our MACD did cross a week ago, but they're pretty flat. If you take a look at the indexes right now are a true measure of being mixed. I would technically call the Dow Jones Industrial Average bullish. The S&P is flat, and the NASDAQ is still bearish. Interesting to see where we move. Right now, October's up almost 3%. I would expect we'll have some rebalancing. We will have a bad day. We will probably finish October down 2% like I was figuring at the start. Economic reports, really pretty mute. Consumer confidence tomorrow, new home sales on Wednesday, durable goods and GDP on Thursday. Very interesting. A couple of you said, Kevin, you're obviously conservative. You look at some stuff and you're like, you're biased. I'm not. Well, Kevin, you go to this Breitbart. I mean, you do these things. Bloomberg, odds of a recession hit 100% and blow to Biden. It's a bad news report about the Democrats. But is this guy an idiot? Well, I know they're just quoting Bloomberg and their comments are what Bloomberg posted. The probability models maintained by Bloomberg economists Anna Wong and Eliza Winger earlier showed a 65% chance of a recession over the coming 12 months. I've always been taught, and the definition of a recession are 2 negative quarters, right? That is our recession. 2 negative quarters, we have a recession. No ands, ifs, or buts about it. Well, this week we have our GDP number. And I'm shocked that for whatever reason, I don't know, let's just face it, people are idiots. People are absolute idiots right now. Q1, GDP negative 1.6. Q2, GDP negative 0.6. We have the first 2 quarters of this year, we have registered a shallow recession. I don't understand why people are talking about a recession in 2023. We are technically in a shallow recession right now. What's a deep recession? 7 or 10% down on the S&P, excuse me, on the GDP. A bad recession, 4 to 7% down on the GDP. Shallow recession, negative 0.1 to maybe 2.5, 3%. It's shocking. And please understand, they're idiots on both sides. Both sides of the aisle here. But Bloomberg, for all those people that are so excited on Bloomberg, and a separate Bloomberg survey of 42 economists predicts the probability of recession over the next 12 months rose to 60%. We are in a recession right now. There's no going to be, there's no, hey, it's going to happen in the future. It's happening to us right now. And unfortunately, people haven't understood portfolios should be changing with it. The 60-40 portfolio has been suffering all year, but there are opportunities for long investors. Every time the market goes on sale, it's an opportunity for someone to be able to buy stock cheaper. They have the annualized decline of 32%. We have a pretty standard 60-40, what was it put at? I wrote it all down here. Don't type anything in because I don't want everyone to know. 42%. 42% is a pretty standard. 42 to actually 48% is the pretty standard down portfolio. That's 60-40. And again, I've tried to say this before. Please do not sell off those bonds. The bonds are down anywhere from 50 to 75%. Some of you are even worse, 75 to 80%, which means you have a 400% return. If your bonds are down 80%, you have a 400% return in the next 3 to 5 to 7 years. Don't let someone like me churn you out of your bonds to put you into a better, higher interest rate and give up. I mean, you're going to get $200 for every 1,000 you invested, 250 for every 1,000 you invested. Literally, there's a 200 to 400% return, depending on how far down you are, by just getting what you paid for, that coupon, right, for those bonds. If anything, if you're willing to sit in it, this is what Buffett does. He buys these up at $200, and 3 to 5 to 7 years, he's going to get paid $1,000. He's going to make a 400% return by buying these bonds that people are dumping so they can go get 5% instead of 1% for a year. That 5% for 3 years is only 15%. 5% for 5 years is only 25%. 5% for 7 years is only a 35% return, where you're going to get back every single dollar that you put into that bond if you will hold on to them. Don't get talked into making a big mistake. All right, let's see what else I have for you here. Taking cover in government bonds in the other session is now an absolute, I can't speak. Absolute strategy. It's just not, it doesn't work anymore. The numbers don't work out. A really good article here. I found another, Simplify the Battlefield, What You Behold, right? Pretty interesting article. What we behold is what we become. And again, this talks about maintaining focus and moving forward. Another good self-help article that I just spent some time on. It's kind of interesting too. I've run through a couple of these. Parenting expert, the number one soft skill that's more important than IQ, right? It's perseverance. Do your kids have perseverance? And I just kind of go through these because I'm obviously not a perfect parent, but I am trying to do the best I can to be a better parent than I was yesterday. And 9 steps to help kids with perseverance, which also helps yourself. And I just thought it was interesting. Warren Buffett finally throws the towel in on 4 lousy stocks. Just as a heads up, Verizon, he is sold out of, Store Capital, General Motors, and US Bank Corp. These are the ones that no longer have the financial backing of Buffett, that just buys and buys and buys on the way down. Not happening. And I'm pretty sure 3 out of these 4, in fact, I think all of them but General Motors, he took a pretty substantial loss on them. So again, one more example of not always making it when when it doesn't do what you think it's going to do. With that said, what questions do you guys have for me today? For us, some big earnings coming up. Coke, Google, Verizon tomorrow, Boeing, Ford, Meta on Wednesday, Apple on Thursday. Some pretty big earnings events are coming up for us. If I've missed a question or a comment, please type it in. But really today, my hope is just to give you guys some confidence moving forward, some understanding moving forward that, hey, Hurley Investments has been here. This doesn't seem so bad yet. In fact, I have an article I'm going to add on to this that some expect 16% upside, some expect another 20% to the downside. If we really could just have a washout towards the end of this year, that could really set us up for an amazing year next year, where we have a 40% down year. Watch it be a 45% up year next year. For us, that would be 100% return on portfolios. Maud says, so-called experts say that China's not investable now. So I did cover this a little bit. The reality is China has been somewhat uninvestable for a while. We have stayed with Baidu. But if Baidu blows their earnings, we're just going to double up on puts and we're going to be out of Baidu. The reality is the numbers still don't make sense. If you look at price targets, they're ridiculously high. This was from yesterday. Their next year fiscal estimate of what they're going to make is 75% of the value of their stock right now, plus. Just a lot of things aren't adding up, but I would not be putting new money to work in China anytime soon. Yeah, well, I mean, the short answer is new money has not been going into China for a while, and it probably should stay that way. Any other questions? What do I think Apple's going to do? Well, so let me go through it really quickly, right? Coke. I'm unsure of Coke on what's going to happen with Coke. I still think people are drinking the product. I think we're going to be, they should be in good shape, right? Google, people are still online. I think you're worried on Google, just like you would be on Meta, just like you would be on Apple, on the advertising spending. When you go into recession, advertising is the first thing to get cut. For Google, it would be the small guys. How many small guys cut their advertising? Big companies never cut their advertising, right? Meta's not going to cut their advertising. Apple's not going to cut their advertising. Google never cut their advertising, but the people that advertise on those platforms, how many small guys had to cut their budgets because of the inflation? This would be the quarter that we would find out if small business is rebounding or if it just got killed by inflation. Visa, as I go through, and again, all I'm doing is just looking at Visa, and I'm going through our reports. Last week we had the consumer credit, so we probably won't have it again until right here. The consumer spending. In fact, the consumer is short on cash, so we're putting it back on our credit cards. Because of that, Visa is doing very well. And I would assume that Visa is going to have a pretty good report for consumer credit. I'm trying to find it so I can show you, and I can't find it. But consumer credit, there it is, was increasing, right? Consumer credit's on its way higher. Why? Well, we're basically, it comes down to prices are higher. We haven't had the increase in salary. Social Security increase doesn't come in till what, next year? It's just people are using their credit card again because we're short on cash, which should be helping the credit cards. In that case, I'm looking that May 22 billion, 36 billion, 47 billion, 34. I mean, it just, we're going. January was 15 billion, February 34, 47, 36, 22. It's just a credit or a cycle. We're going to see that more people are using that credit. So I would expect Visa to go higher. Ford, they already pre-announced they'll disappoint. I think it's baked in. Boeing, cost of material goods are more expensive, but they have their 9.5 year. If their 9.5 year sales log is there, they should rebound. Meta again comes down to small business. Apple, I think it's on their iPhone cycle and their guidance. If Cook is passive on their guidance, you will see Apple fall. Our hope is we maybe get to roll our protection up to 150, which has been a resistance support level in the past. So hopefully that answers your questions in general on what I think on Apple or the other stocks that we have coming up. Any other questions? All right, guys. Hey, pleasure having you here. My accounts are back. The My Hurley Investments back up. So I have like 2 weeks to get uploaded. I'm working with David on getting that done. And that's My Hurley Investment. The Hurley Investments website is going to be up in about 2 weeks. So all my stuff that got hacked, again, they're just websites. No information is stored online for social security numbers or account numbers or anything like that. That's why I don't like China, because China hacked my websites. I own 11 websites. 4 of them had information on them, and 8 out of the 11 got hacked. I mean, they hacked websites that they weren't even up. They have nothing on them. It was really ridiculous. We wanted to blame the Russians, right? Dang it, Ukraine. Get those Russian hackers off of my stuff, but pretty interesting. All we know is that the hack and the malware came from Asia, and nothing like spending the hours with the Securities and Exchange Commission explaining what's going on and what happened. And there you go. Someone may have just typed in, "What do you do to piss China off?" I do my best to tick everyone off so everyone's treated equally. How about that? That's my best answer for you. All right, guys, have a great evening. Hopefully by tomorrow, the My Hurley Investment will have the last 2 weeks put up there. And with that said, I don't know if I'm going to have next Monday. Next Monday's class might move to Tuesday or be pre-recorded. So don't be surprised if next Monday you see a couple emails that just say, "Hey, here's the link to the pre-recording," or that we'll push it to Tuesday. Guys, have a wonderful evening. Appreciate you being here tonight. Look forward to seeing you next week. Stay safe, take care, and until then, keep the faith. Keep the faith, brothers. Bye-bye.